Hello and welcome to Investing Confidential. Well, I've been watching a lot of these pundits over the last few weeks telling people that to buy China. China's cheap, China's a buy, the Chinese stocks, blah 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 blah. I'm gonna take a look at a little bit of a deep dive in here to whether China's a buy, whether you should be buying China or not, and I'm going to give you both sides of the argument, right? So you got the pundits telling you one thing in Wall Street, which, and then you got the reality. So let's just dive into whether China's a buy, whether this is the picking a bottom, because obviously, if you catch China right in the past, you can make a lot of money. China moves very fast. But there's a lot of, it's not as easy as it sounds right now. So let's take a dive into it right now. Let's look at the facts. Okay, so first you have here uh, the FXI. I'm going to use the FXI because it has components. It has, the ADRs like Alibaba, JD, et cetera, and a lot of local, some other local exposure. So here we have FXI, and as you can see here, there is a breakout. Right, we bottomed out at the beginning of this year, and you're seeing a little breaking of a downtrend. Okay, that's getting people excited because certainly if you can catch the bottom of China, you can make a lot more money you can in the S&P, believe it or not. But anyway, so it looks interesting. Okay, from a trading base, looks interesting. But the reality is, in a 5-year look, okay, the downtrend is still intact, even with this little blip we've had. We've had little blips before, but until it breaks this kind of medium to longer term downtrend, it's dangerous, right? It's more of a trade, let's say. We'll get into that later. So again, 1 year looks like it's breaking out. On a 5-year basis, it looks like the downtrend is still intact. So, by the way, Wall Street doesn't care about you. They don't care about investors. They could give a rat's ass about you or your investors. What they want is the Chinese IPO. So when you hear these Wall Street guys telling you China's a buy, China's a buy, all they want to do is pump out China IPOs. Okay, they make a lot of money because they charge even larger fees than they do to the U.S. companies because the Chinese don't care. Okay, they want to jam you with an IPO, and after the thing goes public and trades, and then goes down below the IPO, Wall Street doesn't care. They're gone. They don't even do research coverage on these companies. Okay, so just beware when your friendly neighborhood broker is telling you to buy Chinese ETF or Chinese stocks. They have an ulterior motive. Okay, big time. Don't trust anything they say. And so let's look at the pot. Let's look at what they are saying. Let's talk first. Okay, here's what everyone's jumping around. We've got China PMI. Okay, Purchasing Managers Index. Not the greatest thing in the world, but okay, fair enough. It had a big jump. Okay, that's normally a very positive sign. China PMI, better than expected. Okay, that's getting people excited. Then they talk about the valuations. Okay, so here you see China, cheapest market in the world on a historical basis, probably as cheap as it's ever traded at in a very long time. But the problem is, you're looking at PE, price over earnings. The earnings is suspect. We just don't know. Nobody knows. But you have to be really careful looking at something like this because, yes, it is cheap. And at some point, it's going to be a buy. But, the earnings are suspect. China's economy is in really bad shape. So, really, how could earnings be growing? And they can't. Okay, next thing we'll look at here is another thing that people are getting excited about is the Chinese currency. Very weak. Don't read if you're reading the Journal and the New York Times and the Financial Times that China's concerned about their currency. Please don't believe it. This is manufactured. The Chinese want their currency to be weak because they want to export out of their problems. Okay, this is how China does things. As soon as China's economy is back up again, they're going to strengthen the yuan. Okay, government wants a weak currency. No matter what you hear, they want this currency, the Chinese renminbi, to be weak. Why is it? They want to export, and what do they want to export? All the excess garbage that the Chinese consumers aren't buying. Because Chinese consumers are not buying. They're not buying real estate, etc. And I can Now, again, these numbers, they don't break down very much, but I can tell you that when we go start looking at today these numbers on the export side, you're going to see probably most likely that one of the biggest exports, if you can get this information from anybody, is EVs. Okay. China is dumping EVs, dumping them. End of story. And who are they dumping them on? They're dumping them on Europe, dumping them on Africa. And guess what's next? It'll be dumping them on you. Okay. They're going to be dumping them on you. So the Chinese RMB very weak, and they're dumping things. They're getting rid of their excess inventory. And from a U.S. standpoint, what are they doing? They're rerouting things to Mexico, as you can see here, taking advantage of the new trade agreement that was done by the previous administration and the fact that it's low profile. They can dump goods through Mexico and not get caught. It's helping Mexico a lot, by the way, a lot. But again, we're going back to China. There's a problem. There's a big problem. And so let's look at the economic problems in China. So first, obviously, as I mentioned many times, the real estate market has always been the engine of growth, no matter what you hear about technology. No, it's real estate. End of story. Okay, home prices in China continue to go down. They're on a downtrend. They've been on a downtrend for a very long time. And they're going lower. So you can't get excited. Until this reverses, you cannot get excited about Chinese economy or Chinese stocks. Second thing, the banks are in big trouble, folks. Big trouble. Non-performing loans, those are the vertical lines, they're exploding. And the net interest margins are going down. So the Chinese banks have massive, massive profit problems. They've got big bad debt problems. But obviously, the Chinese banks are owned by the government, so it's not the end of the world. But until this reverses, remember, the government uses the banks to pump money in the economy. So until this reverses, you're not going to see that. So again, another thing to be very cautious of. This is showing that the Chinese economy is very, very weak. Look, the Chinese economy is in a recession. No matter, they say 4% growth, whatever. Chinese economy is in recession. It's the bottom line. Okay, and here's a negative but a positive. The Chinese people, okay, are hoarding cash. They're hoarding cash for two reasons. They don't want to buy real estate because of all the problems, and these wealth management products that they got burned on. They're out of those too. So the Chinese consumer is massively liquid. Massively liquid. That is going to be one of the reasons that you're going to buy China down the road. Because when they put this money to work, it's going to be a boom. They'll buy real estate and they'll buy stocks because that's what Chinese investors do. Okay, so you in the short term, cautious, but something that is going to be a huge catalyst, or for the market, the wind at the back. Okay, and look, the reality is this. I'm going to show you two charts now. First one here is copper. Okay, another reason why the pundits are very excited. Copper. This is a very coppers and China are in sync. And when you have copper breaking out like this, that's usually bullish for China. Okay, another reason why people are bullish. But contrary to this, here is iron ore. Now, China is by far, now copper, China's the delta, the big delta. But for iron ore, China is everything. And look at the price of iron ore. Okay, this tells you all you want to see. So to me, iron ore offsets the big bump we have seen in copper. So let's sum it up. What's the truth? Are Chinese stocks a buy? I don't think so. They could be a trade? Absolutely. Could you trade? Look, as long as his S&P keeps going up, you're going to have an opportunity with Chinese stocks. Again, a lot depends on your time horizon. If you're a medium to long-term person, I would not buy Chinese stocks. But if you're a day trader, a week swing trader, China's got some short-term momentum, but you got to be ready to get out. And as always, try to pick the best companies. Look, if China's cheap, Alibaba is really cheap. If China's cheap, JD.com is very cheap. They're suffering. But these are blue chip companies, very well run companies, believe it or not. So again, FXI is fine if you don't want to pick the stocks, but from a trading basis, there's some interesting things. But again, do not buy this market for the long term. Do not believe the pundits. All they want to do is pump out IPOs and stuff it down your throat. Okay, so there is things to look at in the horizon to be positive about, especially the dry powder. The Chinese citizens have a lot of dry powder. Valuations are incredibly low, but it's really too early to start getting excited about Chinese companies. If you're a trader, fine. So as usual, investors, when it comes to China, be careful out there.